What's up, guys? It's Dan from Coin Bureau Trading. Today we're going to talk about the real reason why altcoins have underperformed. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I'll start off, guys, as always, by reading from a research feed post. It's actually a series of research feed posts I did in the Coin Bureau Club explaining why most altcoins have underperformed, the real reason. So I'll read off part one and we'll quickly get through part two as well. So ever since early 2024, most altcoins have been underperforming Bitcoin and select large cap altcoins. We all know this, and we've all tried to come up with explanations as to why too many altcoins, large cap altcoins somehow draining liquidity from smaller ones, not enough retail investors, not enough stimmy checks, etc. These are all myths and provably false, but the phenomenon of most altcoins underperforming has continued. Initially, my explanation was that many existing retail investors from 2021 and early 2024 who bought altcoins have been waiting for new retail investors to arrive and have been slowly selling as they wait. I think there's some truth to this, and it's worth remembering that there's a silver lining. If most existing retail investors have already capitulated, then they become net buyers instead of net sellers when new retail investors inevitably show up. After doing research for one of our recent videos about altcoin season, however, I came to a sobering realization. The real reason why most altcoins have underperformed might have nothing to do with supply or demand. It might have nothing to do with there being too many altcoins or there being too few buyers. It's likely just a natural trend of consolidation that we see in every asset class as it matures. Stocks are a perfect example here. In theory, stock market indices like the S&P 500 consist of 500 companies. In practice, most of the money in the S&P 500 ends up in a handful of tech stocks, as you guys know, like the Mag 7. The result is that the prices of these tech stocks have basically gone parabolic, while the prices of most other stocks in the S&P 500 have struggled or even gone down. We are seeing the exact same dynamics in crypto. To be absolutely clear, this does not mean that altcoins can't pump or that there won't be 10 to 100x gains. We have already seen many of these this cycle. What it means is that we must be very selective with the altcoins that we pick. And I'll go straight into part two, guys, here, because again, something that you guys really need to understand, because this is, in my view, the real reason why most altcoins have underperformed. So now that we understand the real reason why most altcoins have underperformed has to do with structural factors, wherein capital tends to become more concentrated in a few assets in an asset class as it matures, we can ask the pressing question, why does this happen? There are two simple reasons for it: attention and investment. It's the two things that drive the price action of most assets in the modern day. Attention comes first and investment comes second. So imagine you're a brand new investor. What do you buy when you don't have time to pay attention? You buy the index like the S&P 500. Now consider that most people don't have the time to pay attention to stocks or the markets. The result is index investing and asset concentration in those top, tech stocks like the Mag 7. But of course, crypto technically doesn't have an index. So imagine you're a brand new investor that's interested in crypto specifically. What do you buy when you don't have time to pay attention? Obviously, you just buy the biggest cryptos: Bitcoin, Ethereum, maybe XRP, and Solana if your bank or broker offers them. You don't have time to learn about all the other cryptos, and you don't know how or where to buy them, and you also wouldn't have the time to figure that out. Again, we're talking about the average investor here. Now imagine you're an investor with lots of money to spend, like billions of dollars. What do you buy when you don't have time to pay attention? Typically, at that level of wealth, you would give your money to people so they manage it for you, but let's say you prefer to do it yourself. You buy the S&P 500 because you don't have time to pay attention, and because individual stocks are too illiquid to buy and sell in size. Because you have too much money, you'll be pushing the prices too high or too low, or like basically the prices will move too much when you're dealing with that size of money going in and out of positions. Now imagine you're an investor with lots of money to spend and you want to spend it on crypto. Again, you're limited to buying the largest cryptos. Even if you give your money to someone else to manage it for you, only the largest cryptos are liquid enough for you to buy and sell. The result is bigger cryptos get bigger over time, regardless of how many other cryptos there are. Like in this scenario, let's say hypothetically there was only 5 cryptocurrencies in existence, you would inevitably end up with a situation where most of the inflows would be going into the top 1 or 2 cryptos, and the other 3 cryptos would consistently be underperforming and lagging, except for when there's like some kind of speculative bubble, in which case they would pump, right? But before we go any further, guys, if you are enjoying the video and you did enjoy that research feed post, then do check out the description. Just click more and you'll see down here it says join the Coin Bureau Club. Just click on that link and it'll take you to a page that looks like this. That's where you'll find our Coin Bureau Club, which is where we do deep dives into small cap and mid cap altcoins every single week, where members can vote on the altcoins that we review, where we have a research feed that I'm sharing these types of insights, and of course other members of the Coin Bureau team are doing the same. We have a team portfolio page where you can see which cryptos we hold and which cryptos we're considering buying. We have an exclusive deals page where you can find discounts on crypto research platforms and stuff like that. And we have a members Discord where you can discuss things with us and ask us on reviews on the market and stuff like that. But with all that being said, guys, just to really underscore the point here, this is actually, I guess, somewhat outdated here. This is from Visual Capitalist, and you can see basically the S&P 500 concentration, how much of the gains and how much of the returns, how much of the capital is being concentrated in the top 10 stocks. And you can see that in 2024, that figure was at 38%, the highest on record since basically ever, for the last like 200 years or whatever it is here, 150 years. So it's the highest level of concentration that we've seen in the top assets. But again, as I mentioned in that research feed post, guys, technically speaking, crypto does not have an index. But again, the result of that is that basically people will just buy whatever their bank or broker offers, which is typically, again, just like Bitcoin, Ethereum. Maybe if they're lucky, they can get access to XRP and Solana. But I'll just give you guys a personal anecdote. Like my brother and my dad, of course, they know that I'm in crypto and they've been kind of like, DCAing in or whatever for a long time. But every single time I would say, oh, you guys should know, consider making a Coinbase account or consider making some exchange account. They were like, like I don't have the time. I don't really want to like upload my ID or anything like that. So what they've been doing is they just buy just through their bank or broker, and the only thing they offer is basically the ETFs that are available, which is Bitcoin and Ethereum. And there's also like tax things involved there as well, right? Where if you want to like save on tax and like save into a retirement account, it's typically you want to be focusing, you just want to be diversifying a little bit into crypto, not going like all in and just having, a couple percentage points just in the largest cryptos like Bitcoin and Ethereum. You don't care, you don't have time to learn about the other cryptos. And even if you did, you might not even be able to access them through the vehicles that you're used to investing with. And people forget that this is what the average investor is now in crypto. Like most of the new people coming in are people who fall into that cohort. Most of the people who are willing to go into the trenches, you could make the argument that those types of people are already here. Just to be clear, guys, like the total number of crypto investors could still triple, statistically speaking. But the thing is that most of that new capital is going to be going in this way, again, like into Bitcoin, into Ethereum, and whatever else. This is actually a perfect segue, guys, into these kind of like indices, because for analyzing crypto, because even though crypto does not have an index for investing, it does have lots of indices for analysis, like Bitcoin dominance and like others, and total. In this case, we're looking at total 2 excluding stablecoins. So it's basically the total crypto market cap excluding Bitcoin and stablecoins. And of course, looking at this chart, it's on the brink of a multi-year breakout. But if you hold any crypto that's not, some large cap altcoin, if you're not holding Ethereum or Solana or BNB or XRP, then you're not feeling as bullish, and you're looking at this chart and saying, this doesn't look anything at all like the crypto that I hold. And that's because if you look under the hood of these indices for analysis, you'll see that it's mostly Ethereum, Solana, BNB, or if you're looking at others, it's basically mostly Sui, Hedera, and these larger altcoins that have been more resilient. And if you're holding anything that's smaller, it's had a hard time rallying. And again, it doesn't have to do with the number of cryptos. It doesn't even necessarily have to do with the number of investors. It is simply the nature of the crypto market that as it evolves, more and more capital will become concentrated in the larger and larger cryptos. Again, that'll be mostly Bitcoin, then to Ethereum, then to XRP, Solana. And you can see even scrolling down the total crypto market cap, once you're outside of the top, whatever it is here, outside of the top, top 15, 16. Once you're out of the top 15, you're dealing with cryptos that have market caps that are less than 10 billion. And that number falls pretty sharply. And I think by the time you're when you're hitting like the crypto that's like the 70th or 80th on the list here, you're already dealing with cryptos that have a market cap smaller than a billion. And you can just visualize, again, this is kind of like the reason why it happens is almost like a natural law. It's called the Pareto distribution. Same thing in stocks, same thing we're starting to see in crypto, is that same thing that we see in terms of like wealth distribution in society. More and more capital becomes concentrated in basically fewer and fewer assets and fewer hands. And this is literally just a natural law. And what this means is, again, like in your portfolio, which is, to be honest, that's how my portfolio is structured. I'm basically half in Bitcoin, and then I'm half in altcoins, mostly large caps, and then I have a long tail of small caps, hoping that one of those those small caps is going to be enough to kind of like rise up the ranks, because there still will be those like 10 to 100x gains. And even these among these larger cap altcoins, like they're still going to see solid returns. But the thing is, guys, that if your portfolio is, I guess the key takeaway of this video is that if your portfolio is structured that you're 100% in like these small speculative altcoins, you're probably going to have a hard time. And it has nothing to do with the supply of altcoins. It has nothing to do with the demand for the altcoins. It has everything to do with the structure of the crypto market. That basically, if you, I don't know, if you were to say hypothetically, out of every dollar that's being invested into crypto, whatever it is, 60% of it is going into Bitcoin, then 20% of it is going into Ethereum, and so on, right? Like statistically speaking. And then only a small fraction of that capital is finding its way into these smaller cryptos, not because they suck, not because there's too many of them, but simply because, just as a natural law, that we see again in stocks, that we see, I think, even precious metals, where the largest one takes most of the market share, and then it's basically like an exponential decline lower in terms of how much capital is being allocated into those other assets. And again, it doesn't mean those other assets can't rally, but if you're looking for a structured, balanced portfolio, which again, thankfully, that's how I had mine set up the entire time, was again half Bitcoin and then half in altcoins, mostly large caps. Like when we see these huge drawdowns and everything, like my portfolio is still fine and I'm still in the green. But of course, everyone who's just been aping into these small caps is having a hard time. And again, the silver lining is that yes, those small caps will still experience a rally, but as time goes on, especially into future cycles, you really have to be more and more selective with the altcoins that you pick, and you really have to think and ask yourself, okay, out of each new dollar that's coming in here, where is that capital going to go? Again, it's going to be Bitcoin, to a lesser extent Ethereum, to a lesser extent Solana, and the further you go down that list, like the more and more like diminishing those investments become, if that makes any sense. So yeah, guys, it's a little bit of a sobering thought, and to be honest, it's something that, you know, for the longest time, because I know, just on a personal note, is that when all these people are giving out these arguments as to why altcoins are underperforming or why this and that is happening, the thing is, like, I'll be straight up with you guys. Like, I know that I don't always get things right, but I know that when an argument that someone else is giving is wrong, and that's the thing that's been kind of frustrating for me, is that all the arguments that people give is as to why, for example, like altcoins are underperforming. I know that the arguments are they're provably false. Like even something like, oh, there's not enough money because of stimmy checks. Well, that doesn't make any sense, because retail investors are speculating in stocks at levels that are basically, you know, whatever it is, 2 to 3 times higher than what we saw in 2020 and 2021. So if they're investing at sizes, I think there was record investment. Here's a fun fact for you guys: in September, $100 billion invested into stocks from retail, a record level. So this whole idea of, you know, like that there isn't enough money, or even again when it comes to the number of investors in crypto, 20% of investors in like North America and Europe hold crypto versus 60% that hold stocks. So the number of crypto investors could theoretically triple. But the kind of nuance in both of these cases is that yes, retail investors are speculating in stocks at record levels, but most of that capital is going into the largest stocks. And same idea, yes, the number of crypto investors has been increasing. That is empirically true. Like reports from Galaxy Digital and all these institutions, that percentage, whatever it was like 20% last year, and this year it's like already closer to like 23 or 25%. So the number of crypto investors is growing, but what are they buying? They're buying primarily Bitcoin, Ethereum, and whatever else, because they don't have the time to actually learn about all these cryptos. And even if they did, they might not be able to access them. And even then, it's like they just don't want to deal with all those nuances, right? So yeah, so that's been kind of like the frustrating thing, and it's kind of, you know, in some ways a relief to understand the actual dynamic going on here. But of course, it is a little bit depressing for anyone who's holding, like, if you're like 100, if you're literally just holding like, you know, 100% of your portfolio on these like micro caps, you're probably going to have a harder time. But I would imagine by this point, you probably understand that, you know, regardless of what the reason is, that's just the reality of the situation. And I'm just thankful that my portfolio is structured accordingly. And yeah, guys, is, you know, the crypto market, and this is one thing that people also don't understand, is the crypto market is going to change over time. It doesn't mean that there won't be gains. It doesn't mean that there won't be 10 or 100x returns. It just means that the types of cryptos and the ways you find them, that's going to have to basically change. And maybe I'll do a video in the future again, like looking at, you know, where specifically to find these types of altcoins. But of course, right now, probably not the best timing for it. Anyways, guys, if you did make it this far and you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.